This is a Forex Preview here at XM.com. Thanks for joining us. I'm Cristina Marujos. With me today is investment analyst Cristina Barcenido. We'll be having a look at the U.S. inflation report out this week and, of course, the outlook for the dollar. Inflation, Cristina, has been running hot lately, and it's unlikely Thursday's report to be any different. However, not so long ago, we were wondering whether inflation is close to peaking, but now with the geopolitical crisis unfolding in Ukraine, one would argue that inflation is bound to get uglier before it gets better. Therefore, how much gravity is Thursday's report going to have for the Fed in deciding how to hike rates next week?
Hi, Christina. That's right. The inflation problem will probably stay with us longer than we previously expected. Supply disruptions from the pandemic haven't faded yet. And while analysts were expecting to see whether wage growth could create the next round of inflation pressures, the Ukrainian geopolitical crisis emerged unexpectedly to make things worse. The sanctions imposed to Russia and Russia's countermeasures could create steeper global price increases in the year ahead. And the question that everyone wants the answer to is how central banks will respond to that. Well, the US could get affected from that economic war of sanctions, let's say, but probably to a lesser extent than Europe and other economies which rely more heavily to Russian imports and financial services. So the Fed may not change course for now and will probably stick to its rate hike plan to cool inflation, likely delivering a 25 basis point rate increase next week as investors are fully pricing in at the moment. Powell has also confirmed that last week, so there's no doubt about it, which makes the US CPI inflation report for February this week less important since the Fed has already guided investors about its next move. However, I don't expect markets to fully ignore the data because Powell kept the case for a more aggressive rate hike in place during his latest speech, so investors could get fresh direction from this week's inflation data about whether the Fed could become more aggressive sooner than later. Forecasts suggest a stronger price growth of 7.8% year on year from 7.5% previously. In February, that would be a new 40-year high if it turns out to be the case. More importantly, the core measure, which excludes energy and food prices, is also expected to keep moving higher to 6.4% year on year, suggesting that the inflation problem becomes a broader problem and spreads to other industries which are less related to the pandemic. And we recently got another robust employment report showing the unemployment rate falling to pre-pandemic levels. So overall, the inflation report could still have some gravity both for the Fed and the market reaction.
Let's have a look at the dollar as well, because it has been gaining recently on the geopolitical crisis in Ukraine. Can a strong inflation percentage boost it further?
Well, as we mentioned before, there might be some reaction in markets just because there's still some unknown information about whether the Fed will deliver a steeper rate increase if inflation keeps trending significantly up. However, at the moment, there are 4 rate hikes well priced in for this year and future markets, and there is a potential for some more rate hikes to come in the remainder of the year. So since investors are somewhat informed about how the Fed's policy may develop in the year ahead, the dollar could get a softer boost if the data surprise to the upside. And perhaps the fact that the dollar is a safe haven and the most used currency for international trades could provide a strong footing under the greenback. But generally, the data reaction could be relatively less softer, I think, and it would be interesting to see whether the report will help dollar yen breach the strong resistance around 115.50 and rally beyond the crucial ceiling at 116.33.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.